All right, thanks for staying with us. We are talking about flood insurance in Florida with the Deputy Insurance Commissioner, Richard Kuhn. Thank you for staying with us, Richard.
My pleasure.
All right, so the state of Florida, the legislature reacted to part of the flood insurance crisis and said, let's make it easier for private companies to write in Florida, and they passed legislation signed by the governor. Is it working yet?
Well, I think we're talking to several carriers who are interested in writing flood. We haven't approved a new company since the legislation was passed, but we are in conversations with some companies. There was a number of things in that bill that made it easier for companies to go ahead and get in the marketplace, and we won't have prior approval on the rates like we did under the old system. So
that means someone can come, say, I'm going to sell insurance. If you say they've got the wherewithal to sell insurance, they get to charge what the market will bear until...
That's true, and until I think it's 2015, if I'm not mistaken, or no, I'm sorry, it may be 2017. But there's several years before we'll start looking at the rate on a prior approval basis. But keep in mind that the federal program will keep a cap on what they could actually charge in the marketplace, because consumers can still go buy the NFIP policy, which now is capped at 18% for a primary residence. So that will give you some ceiling for what the private market could write if they were to be interested in that.
Now, one of the sticking points, and I don't know if the department had a position or not during the legislative session, was between the House and the Senate, and that's how much insurance do I as a homeowner or a property owner need to carry? Do I need to carry the original amount of my mortgage, or do I need to carry just what I owe the bank?
Well, I understand there were some discussions about that, and I think the industry, for the most part, feels like if they're going to insure a risk, that they want to insure the entire risk and not just the amount of the loan, and that encourages people to build back their home and make it insurable again after it suffers a loss. So there was discussion about that. I think the other argument is consumers couldn't afford these higher insurance rates, so why not let them just insure the amount of the mortgage and be responsible for repairing it themselves after that. So that was a discussion point, but at the end of the day, you do have to insure it for the value now, not just the value of the mortgage, but the replacement value of the home, or you can insure it at actual cash value.
All right. So if are we a year or 2 years away from seeing competitive rates in this market, and how much of that depends on the loss, I guess, of if there's a bad season again?
Well, I think we've got to see what the federal program eventually does with their rating plan. But from a private market perspective, we've got two carriers that are offering rates lower than the market, lower than the federal program is now. So our hope is that as capital continues to come into our market, we hope that they will see opportunity here and recognize that they can write flood here and make money.
And speaking of capital coming in the market, let's switch gears to the regular homeowners market, which in your lingo is HO3,
yes.
And that's probably better than it's ever been.
No question.
And why?
Well, as you know, we went through a very difficult time after the '04 storm season. Reinsurance prices skyrocketed. We had the worst economic period in our history since the Great Depression. And we experienced a lot of losses in sinkhole, which the legislature addressed through Senate Bill 408. So we went through a period of time there for years where we had all these different elements influencing property rates, notwithstanding that we also had some model changes in that period that just the change in the models caused rates to go up for some inland properties. So all that happened and created an environment where it was difficult. We had a lot of rate increases going through. And what's happened since, obviously reinsurance prices are down, which is a significant portion of the rate. And the loss trends for the non-catastrophe losses, for example, sinkhole, have been dealt with, particularly through legislation. And good luck. We've had no hurricanes. So all those things together have created this great market we're in, where we're seeing competition now.
And I'm guessing we're still paying some of the price of the losses from '04, '05, although Citizens, I guess, has stopped collecting already. if I'm correct.
That's true. The CAT fund has stopped their assessment. And I think Citizens is very close. They're going to end theirs early. So I think where we are now is, again, we've got a very competitive market, particularly in certain segments. The assessments have ended for the CAT fund and will end at some time sooner than they were expected to for Citizens. So, and companies are lowering rates. We're seeing lower rates because of lower reinsurance costs and their loss costs. Their non-catastrophe losses have been lower. So there are a number of issues here that have created a very good market.
The non-catastrophe losses, is that because people are building better, or do you have a sense on why?
Well, it's a number of those things. When you talk about non-cat losses, you're talking about, not just sinkhole, but fire losses. You could be talking about losses related to hurricane through mitigation, reducing hurricane losses. So there are a lot of issues that influence both catastrophe and non-catastrophe losses. I think what we're seeing for the most part is we're not seeing non-catastrophe losses like we don't see an uptick in fire or sinkhole, or there is some concern about some perils related to the water damage issue, but other than that, I'm not aware of anything in particular that we can expect to change the direction of where our market is headed.
All right, we're going to take another quick break. Everyone, stay with us. When we come back, we're going to talk about, if you're in Citizens, what it might take to get you out, or how you might be forced out, a new marketplace scheme that will affect all Citizens customers in the near future. Stay with us. We'll be right back.
Warning. You may have heard about medical marijuana, but there's a lot you don't know. Medical marijuana lets teens buy pot without their parents' permission, without modern medical safeguards, and without a doctor's prescription. You've been warned. You've been warned. Sponsored by Drug Free America Foundation, Inc. www.dfaf.org.